What is up, everybody? Steve here. I hope you're doing well. Today we're going to talk about mortgage rates and how they are just exploding, and I don't even think we've come close to seeing peak numbers for interest rates. Even right now on Mortgage News Daily, we are looking at 7.29%. Oh man, what is this doing for real estate altogether? We're going to talk about it right now. We're going to dive into an article real quick and then talk more about where I foresee real estate values going as well. So if you're sitting on the sidelines or you're an investor or maybe you own a property, what you guys should be thinking about right now. So let's dive into this. Mortgage demand continues its downward trend last week, reaching the lowest level in 25 years, according to the latest survey from Mortgage Bankers Association. Depository banks such as JP Morgan Chase, Wells Fargo, and Bank of America have already experienced double-digit contraction in their production in the third quarter, and I think it's like 90-something% of CEOs in the United States are stating that they foresee a recession, and it could be an ugly recession as well. The MBA survey shows that the mortgage composite index for the week ending October 14th fell 4.5% from the prior week and 68% compared to the same period in 2021. The refinance index decreased 6.7% from the week prior and was at 86% lower than that of the same week 1 year ago. The speed and level to which rates have climbed this year have greatly reduced refinance activity and exacerbated existing affordability challenges in the purchase market. That's the MBA Vice President stating, Joel Kahn. Mortgage applications are now in the fourth month of decline, dropping to its lowest level since 1997. And Kahn said, with rates such as high levels, the adjustable rate mortgage rose to 12.8% of all applications last week, which is the highest share since March of 2008. ARM's adjustable rate mortgages loans continue to remain a viable option for borrowers who are still trying to find ways to reduce their monthly payments. The sun just shot out and I'm getting blinded here. Anyway, I think that's some bullshit advice for one thing. Like, why would people want to go into something so risky, into an adjustable rate mortgage, when you have real estate values as high as they are right now? And there are certain markets that are starting to decline. So if you guys are contemplating even getting into an adjustable rate mortgage right now, I would caution you, really just do some math, do some numbers. I'm not a financial advisor, but this could put you in a really bad position because odds are that loan will adjust in maybe 3 years, 5 years, and you have no idea if the value that you paid today is going to be the same value 5 years from now. It could be significantly less, and if it is and you didn't have enough of a down payment, you are going to be completely upside down. Let's jump over to this article real quick, just talking about the 10 metro areas. And now remember, this is pertaining to the last 3 months ending in August 2022. So we're not even talking about September or October. San Jose, California down 9.4%. Seattle, Washington down 8.2%. Oakland, California down 7.6%. Coeur d'Alene, Idaho down 7.3%. San Rafael down 6.2%. San Francisco down 5.4%. Idaho Falls down 4.9%, Boulder, Colorado down 4.5%, Logan, Utah down 4.4%, and Boise, Idaho down 4.3%. We know that most of these markets received a huge influx of population due to migration and work and everything else during the pandemic. We get it, but any areas, any metro areas, even here in Southwest Florida, that experienced a big wave of population coming into markets, those markets are going to get hurt, and they're going to get hurt badly in my estimation. The Fed right now, they are going to keep increasing the Fed rate for the foreseeable future. What that looks like by the end of the year, that could be 4%, that could be 5%. And even though that's based on short-term rates, it has an indirect effect on long-term rates as well. So could we see mortgage rates, we're at 7.2%, roughly around there. Could we see 9%? Could we see 10%? Could we see that happen before the year is out? I don't know, but the Fed is doing what they say they're going to do, and even Chairman Powell has come out stating that he wants to, or stated basically needs to, correct the housing market. It needs a correction. Affordability is out the window. And right now, look, my thought process is, if you've been on the sidelines, I would say continue to wait, see what happens, buy when prices come down further. If you're an investor, I don't see many properties making much sense in terms of a fair cap rate that you guys can anticipate for cash flow. And especially if you're taking on debt and the rates that we're taking on right now, it's really going to eat away your cash flow and could put you in a jeopardizing position. If you currently own a property and you guys are facing some sort of hardship, and you guys have a good, 30-year fixed rate, 3.5%, whatever it is, and you're possibly going to go delinquent on that mortgage, I highly encourage you guys to go and look at the option of renting the property out before you guys are forced into that situation. Take a look at the rental market, see what the rental market is doing. Hire a real estate agent to do some valuations for you, because you might be in a position, especially with the high rates of rental rates right now, you might be in a position to actually cash flow. Now, you might be in a position where you're like, well, I don't know where to go, so I'm in this situation. But the situation of staying in your property, going delinquent on your mortgage, is going to be way worse than moving out and actually keeping that property, keeping that asset, and a cash flowing asset for you and your family. The debt that people have taken over the last 2 years is the real asset, because of the low interest rates on 30-year and 15-year terms. So if you're in that situation, be sure to do more research before you get into a potentially worse situation. As always, I appreciate you guys being with me here today, and I'll see you guys on the next video. Thanks a lot.